Hey guys, how's it going? Right off the bat, my voice is probably a bit nasally, I've got a bit of a blocked nose, so you won't have my usual silky smooth tones, but we'll make do. I was just helping someone in the Discord this morning. They had a question about EMAs, and they're not something that I use personally, but as I was helping them, I stumbled across a really simple, it's a well-known, I didn't come up with it, but a really simple strategy that you could be using to make money. And it really reminded me of when I was probably about a year or two into my trading journey, and I was breaking even, and I just kept thinking I needed one more tool, a better indicator to learn supply and demand, where I was using support and resistance. I thought that I just didn't know enough, I suppose, tools to be making money in the market. And I read a book called Trading in the Zone. I think I heard Shams recommend it the other night, and Mark Douglas, the author, he talks about how that's a really common trap for traders to fall into, where they just keep thinking they need one more thing and then they'll make money. And usually that's not the case. Usually it comes down to psychology. That's definitely what it was for me. And so eventually I started simplifying my trading processes and I started making more money. So it was just something that I wanted to share with you guys. I'll run you through the strategy just to show you how simple it can be. And yeah, I mean, you can make money off support and resistance. Like the boys say, like in the course, you will learn everything you need to make money. You might find a different strategy that works for you. Like I don't think the boys teach EMAs. This is an EMA strategy, but you can 100% make money off just what the boys teach. So just something to keep in mind if you are thinking that you need to learn more indicators or more whatever it might be. There's a good chance you don't. There will be indicators that might help your strategy, but there's a good chance that it's possibly more psychology related. And how do you figure out which of the two it is? Don't ask me. Ask someone that knows better. So, all right, let's get started. Right, so you can see here we've got my trading view screen. What I've done is I've just hit the replay and I've gone back to the start of this year. So the strategy that I was talking about with this guy is called the Golden Cross. It uses moving averages. So they're called exponential moving averages. So I usually chart on my computer, which is much bigger screen. So it actually says indicators. So I'm trying to figure out how to add them. Nope. When I'm on this, indicators, beautiful. So what we want is moving average exponential, and we want to have two of those, so we can just double click it. So what these are, I'll chuck them on first actually. So for the Golden Cross, you want the 50 EMA, and we'll make that one orange. I like to make my faster EMA orange just because mentally it's a bit of a faster color. Probably should be red, red goes faster, but orange is what I'm used to, so we'll stick with that. And we'll make the next one the 200 EMA, and we'll chuck that one as a bit of a darker blue, make it a bit thicker so it's easier to see. All right, so what EMAs actually do, so there's two types of moving averages. The standard, which is just the average price of the last however many candles you set. So when we change the length, that would be over the 50 EMA, it would just over the 50 moving average, it would just be telling you the average price of the last 50 candles. With an exponential, basically what it means is it's weighted. So it gives more weight to the ones that were recent and less to the older ones. So like the EMA versus the MA, it tends to just react a bit faster because the recent candles give more meaning to the line. If you want a more detailed explanation, there's probably hundreds on YouTube, and they're not something I use. So you can definitely find someone that will be able to teach you about MAs and EMAs better than I can. But the point of this video was just to show you this simple strategy. So all we are looking for with the Golden Cross is for the 50 EMA, so the orange one, to cross up over the 200 EMA, which is the blue. So what we'll do is we'll hit play. Where's my replay tool? we'll hit play. And when that happens, we'll enter along and we'll put our stop below the previous low. So what I would advise when you are back testing like this is have, there we go, there's our cross. So is have your trade plan open somewhere that you are testing. So, and then just as the boxes get ticked on your trade plan, you enter and exit. All right, so you can see the crosses here. So let's say we got in on this candle somewhere in, this bit of support and resistance, because not support and resistance, this little zone, because even if the cross had come overnight, we would have woken up in the morning, seen it's crossed, we would have been in here somewhere. So the previous low, we'll say there. And what I reckon we'll do is we'll target based on previous structure. So what I would personally probably do is have multiple targets. I like to ladder my take profits, but for the sake of this, we'll just stick one right there and we'll see what happens. Whoop. Here we go. And there we are. So that's a winner. We'll keep going and we'll just run this until the next time that we'll have to wait until the orange is below the blue, the 50 is below the 200, and then we'll have to wait for it to cross back up. There we go. So it's gone below. So all we're doing now is just waiting for that cross up. And you can potentially do the same in reverse. So when the orange crosses below the blue, that's called a death cross. You probably could short there. But for the whole point of this is to show you guys how simple strategies can be. So we'll just take one-way trades this time. All right, so we've had our cross there. It's not looking good. Prices come back below the EMAs, but according to our trade plan, we just enter when the 50 crosses up. So we're not waiting with anything else. You absolutely could, but been stopped out. All right, so we've taken one loss and we've had one win of 2.28. So we're currently up 1.28% of our account if we're always risking 1% of the account. So let's see what happens. We'll just wait for that next golden cross. Well, I reckon that's one there. So we'll move this across and we'll get in there. Stop below previous structure. We're going to target there. What I would probably do is target, say 50% of my position I'd take off at this price, and I'll probably take another 25% there. Probably just move my stop loss up on the rest of it. But for the sake of simplicity, we'll see what happens here. Boom, there we go, starting to move. And you can see, oh, there we go. How quick's that? You can see when the EMA starts to spread like that, that's a really good sign. It means the market is trending really hard or really well. So that's a good, if you're in a long and the EMAs start to spread like that, you can start feeling good. You should feel good all the time, but that will help give you confidence that your trade's going the right way. So same thing again, let's just wait. So we're currently up, we're up 1.28 after this loss, plus 2.98. So I'm just going to call that 3 because I can't bother doing the maths. So we'll call that 4.28 that we're currently up for the year. And we've done basically no work. Ooh, did we get across there? No. So the blue stayed above. Oh, there we go. So hang on. Crosses there. We'd probably get in somewhere on this candle. We'll take like the worst case scenario. So we'll say we didn't get in until later. And we're targeting previous structure. I would probably not target those. I can't zoom out anymore. So we'll come across because we've sort of already, the fact that we've leveled out here and then started moving up, I would think that we're looking at another leg up. I mean, it's easy to say because I know that we are going up from here, but I would probably target somewhere around there. So we'll call that exit 1, and we'll see what happens. There you go. Now I think that's the last one we've had for the year. 1, 2, 3, 4. No, I think we get another one. So there's that death cross we talked about. Now the thing is, you probably wouldn't be short until down here, so it probably wouldn't be a great trade because your risk to reward would be terrible because you've got that much before your stop loss. So we're getting close. Are we going to get across? Boom, there we go. There's a cross. So let's say we got in. Say we got in on that candle. It's not below there. I wouldn't be targeting here. Sort of the same thing. To me, we've just formed higher low, higher high, higher low. This is on higher time frames, like you'd be looking at sort of daily. But because EMAs are really good for trending, and especially the 5200, because that's such a long sort of slower EMA. It's really good for catching trending markets. So I would sort of be looking at my market structure on the daily in terms of why I think that we're going to keep going up. Same thing, we'll come back. I think we'll probably break that. So to be honest, I think we'll probably go through those, but let's just call that it. Depending on, I want at least 2 to 1. I'd probably be looking for a lot more, but let's see. There you go. So over the course of a year, well, not even a year, what are we? Basically November. So over the course of 10 months, we took 5 trades. We got 2.28 minus 1, so 1.28 plus 3, 4.28. Let's call that 4.5. I shouldn't have used the 2A. But if that's 4.5, that brings us to 8.7. In fact, let's use a 4.52. 8.8. Yeah, 8.8. Beautiful. And then plus 2.33, so 11.13. So you can see that. So over the course of the year, you've taken 5 trades. You've probably looked at your charts for an hour total because you could just set alerts to tell you. Add alert on EMA. I think you can say, yeah, crossing up. Yeah, beautiful. Crossing up over the EMA 200. So that will only go off when you get the golden cross. So, you know, you could walk away from your charts for months, only look when you get those alerts, and you've just made 10.33%, 10.13% of your starting account balance. Now that's ignoring compounding because, you know, as you get wins, you'd probably increase your position size on these ones and decrease as you lost the 1%, obviously. But if you had just kept your account size flat when you were calculating everything, you just made 10.33% for probably an hour's work. Simple, stress-free, you know. It really just shows how trading doesn't have to be complicated. So hope you guys get something out of that. And as I said, you know, if you want more information on EMAs, there's plenty of it on YouTube. And yeah, good luck. Let me know how you go.